Good afternoon, everyone. We'll commence the webinar in the next 2 to 3 minutes. Thank you for your patience. Good afternoon, everyone. On behalf of CMS Info Systems, we thank you for taking the time to join us today for this landmark event in the journey of the company. We welcome you to the virtual brokers and analysts meet on the announcement of the company's forthcoming IPO. Before we begin, I'll take a moment to introduce the spokespersons from the company. We have Mr. Rajiv Kaul, Executive Vice Chairman, Full-Time Director and CEO, and Mr. Pankaj Khandelwal, President and Chief Financial Officer. We also have senior investment bankers on the panel who represent the lead managers to the IPO. We have Mr. Vishal Desai, Senior Vice President, Equity Capital Markets at DAM Capital Advisors Limited. Mr. Mohit Pandey, Managing Director, Investment Banking at Jefferies India Private Limited. Mr. Anuj Mittal, Director, Corporate Finance, GIG and Infra at GM Financial Limited. And Mr. Kunal Malkan, Senior Manager, Equity Capital Markets at Axis Capital Limited. I'll now do a quick walkthrough of the conference guidelines. All microphones have been placed on mute. We'll have a presentation by the company's spokespersons, followed by a Q&A session. The questions, as usual, can be typed in the Q&A panel available to you, and they'll be read out to the management in the Q&A session. Before we kick off, we have a short corporate video to take you through the journey of the company. May we have the video now, please?
In the next few years, India's economic growth rate is predicted to be one of the highest among the G20 countries. Result? An increase in disposable income and consumption, a rise in organized retail and e-commerce, an increase in the number of transactions and volume of cash movement in the economy. We are CMS. We play an important role in connecting commerce and facilitate the flow of money across the economy. Our integrated B2B outsourcing platform caters to banks, financial institutions, organized retail, and e-commerce companies in India. As of March 31st, 2021, Frost & Sullivan ranks us as India's largest cash management company based on number of ATM points and number of retail pickup points, and as one of the largest ATM cash management companies worldwide based on number of ATM points. Our services extend across multiple stages of the cash cycle in India. Cash and transit services, ATM cash management, ATM managed services, retail cash management, currency processing, currency chest automation. We believe we aren't just in the money moving business. We are in the connecting commerce business. And we do this in many ways. Our end-to-end ATM cash management services to banks cover the length and breadth of the country. We provide retail cash management services to e-commerce logistic providers, large format organized retailers, railways and transportation network operators, hospitals and insurance companies, hospitality chains, government and utilities, NBFC and financial institutions. Our cash in transit services enables banks to efficiently and effectively distribute cash to their branches. Our currency chest automation for banks and NBFCs covers cash in transit, cash processing, reconciliation and reporting of movements. We also provide bullion logistics services for delivery and pickup of bullion between businesses. We rank as one of the top 3 in banking automation product sales in FY21. We provide an integrated platform for brown label ATM and managed services and are one of the few players with capabilities in deployment and maintenance across various product types. Our multi-vendor software solution enables banks to centralize their ATM channel management, resulting in improved customer experience and security. Through our AI and IoT-based remote monitoring services, we enable banks to monitor and control ATMs across India. Our end-to-end card issuance, management and personalization capabilities support Government of India's initiatives to improve financial inclusion. We have a pan-India presence with a fleet of 3,900 plus cash vans and a network of 238 branches and offices as of August 2021. Our footprint extends across difficult to reach and remote rural and semi-urban areas, and even a few locations which are only accessible by boat. Our integrated business platform is supported by customized technology and process controls, such as technology-intensive location intelligence maps and route optimizers, mobile applications to enable field mobility.
India's banks have trusted us for over a decade. We are a market leader in India's cash cycle across both the technology solutions as well as logistics services. With a successful track record of incubating and growing new businesses, we are quite excited about the future potential of fast-growing areas such as AI-based remote monitoring, payment solutions, and financial services distribution. We aspire to being an integral part of the future of money and commerce in India.
We are CMS and we connect commerce.
Thank you. I'm sure that video has thrown some light on the operating model and business highlights of CMS Infosystems. I now invite Mr. Vishal Desai from DAM Capital to initiate the proceedings.
Thank you. Good afternoon, ladies and gentlemen. On behalf of DAM Capital Advisors Limited, I welcome you all to the virtual broker conference of CMS Infosystems Limited IPO. I hope you all are doing well and keeping safe. We at DAM Capital feel extremely proud and honored to be associated with CMS Infosystems. I will not take much time explaining the company to you, but given the journey that the CMS team has gone through and what they have achieved thus far, I would take a moment or two to highlight some of the key aspects. Backed by Barings Private Equity Asia, CMS is India's leading B2B outsourcing service company with an integrated business and a market leadership in the business segments it operates in. India is the third largest ATM market in the world, and CMS is India's largest cash management company, bases the number of ATM points and the number of retail pickup points as well. It is also one of the largest ATM cash management companies worldwide. Its pan-India fleet of around 3,900 plus cash vans, plus a network of around 238 branches and offices, covers close to around 97% of India's union territories and almost 77% of India's postal codes, which explains their depth and their reach across pan-India. The strength of its long-term relationships with customers puts it in a very strong position to win new mandates for other key segments of the same customer, as well as generate cross-selling opportunities and enhance its market reputation, which in turn leads to a higher degree of repeat business and new generation of business opportunities. I'll give you a quick snapshot about the IPO. The IPO is a complete OFS of INR 1,100 crores by Barings Private Equity Asia. The price band is INR 205 to 216 rupees. The total issue size will be 1,100 crores at the upper end. Issue opens to public on Tuesday, December 21st and closes on December 23rd, Thursday. The anchor is on Monday. We've received a strong interest from marquee domestic and foreign institutional investors throughout their investor activity program, which is a testimony of how investors view this company and appreciate the efforts of the management team to build such a robust business model. We have with us today from the management team, Mr. Rajiv Kaul. He's the Executive Vice Chairman and Whole-Time Director and CEO, and Mr. Pankaj Khandelwal, who's the President and the CFO. I'll now hand it over to Rajiv to take us through the journey of building up this business. Over to you, Rajiv. Thank you.
Thank you, Vishal. Good afternoon, early evening to most of you. Thank you for taking the time to be with us today and to hear our story. I have three parts of what I want to talk and cover with you. I want to talk about who we are, what do we do, and how are we trying to grow in the coming decade. Post which, this should take about 30-35 minutes, and post which we shall get into Q&A. So to introduce ourselves, I think the important part for you to understand is who is the team and what is the team, because most company institutions are built by the quality of its people. And while we have a vast network of almost 23,000 employees, associates across the country, it's important to understand the management team which leads all of these people. I've been with the company for over 12 years. My prior background was in Microsoft in technology, where I built the India business for many years. And then I ran some part of the emerging market work from Seattle. I did switch careers to private equity in London and then came back to India to do my own buyout, partnering at that time with Blackstone to buy a controlling stake from the Grover family in CMS. Blackstone then sold their stake to Baring Asia in 2015, who've been our largest shareholders and partners since then. Pankaj, our CFO, has been in the company for more than 15 years and has had the chance to work with both the founding family and both our subsequent private equity shareholders. Anush Raghavan, who runs our larger business on cash management, joined the company right after the buyout in 2009 and comes from a consulting background and has worked in the company building and fixing various parts of our business and functions. He also leads the cash management industry as the president of the Cash Logistics Association. Manjunath, our other colleague, joined us about 10 years ago with a very good pedigree background in companies like NCR and Diebold across both India and Asia, and is running as president our fastest growing managed services business. Sanjay Singh as a CHRO and Rohit Kilam as a CTO are recent additions to the management team in the past year. Both of them have again got a very good background. Sanjay has had a career from ITC and General Electric, Kane and Strides Pharma. Rohit, I know, has got experience from TCS, IBM, and Birla Finance. And then, the good thing about this team, and if you look at our top 15 people, almost half of our top 15 key people have been in the company for over a decade, which sort of gives you the confidence that the team knows each other, works with each other very well, has handled both upswings and downswings and up cycles and down cycles in the industry. And the fact that we have been able to attract and hire good quality talent at every part of our journey. At a board level, which is focused on very high governance, we have Ms. Shamla Gopinath as the chairperson of the company, which is, and she's got a background as deputy governor of RBI, and also as she has been the former chairperson of HDFC Bank. Chris Jamrose has been in the company on a board for quite some time. He is got a background in cash management, where he built and ran Garda Cash, which is America's #3 cash management company. He currently runs two large logistics companies in the United States, Ascent Global as well as Roadrunner Transportation. Mr. Tapan Ray on our board is a current CEO of Gift City and former secretary of Ministry of Corporate Affairs. And then from Barings, we got senior partners Jimmy Methani and Ashish Agarwal. We've always been, for the last 12 years, every year our auditors have been the Big Four. So from overall perspective, this is a company where you would expect and depend on a very strong, stable, talented management team backed by a very strong governing board. Switching to what is our platform and what do we do? Our oldest business is the cash management business. which for your perspective is a very strong, robust, deeply penetrated logistics business where we manage the currency cycle on behalf of the banks. We have built phenomenal moats around distribution. We are present in 238 branches. We cover 15,000 pin codes. So you start comparing us to any of the largest e-commerce companies even in India, we've got a very enviable distribution network. We run this on a fleet of 3,900 vans. As of August, we are handling more than 66,000 ATMs and 43,000 retail cash points. Our market share is the highest in all the cash management verticals of ATM, retail, and currency in transit. CMS is the #1 player in each of these three verticals. But to run this network, when you talk about 66,000 ATMs, it makes us amongst one of the world's largest ATM cash management companies. To run this network is not only about shared logistics and branches and vans, it's a lot about technology. It's all about risk management systems. I think we've established world-class operating metrics out here, which I'll demonstrate through some numbers in subsequent slides. We have taken the strength of this business and then we expanded that into the broader technology services space around the cash cycle. The first one comes to mind is the whole managed services of our ATM network, which banks at many points were doing it in-house, but over time to get economies of scale and to get very good world-class quality, they've started outsourcing the ATM managed services to external third-party companies. CMS entered the space about 5 years ago. We do everything from product automation to maintenance of these products, to managing the networks, to deciding which sites of ATMs can be profitable, and to going all the way up to running the software and customizing the software which runs on the ATMs, which all of us transact on. So we've got, again, very significant base built over the last 5 years. This is a business we have mostly grown in-house. And in the last 15 months, we've built a very strong order book of close to 1,550 crores. Last year in 2021, actually 2020, which I call financial year 21, we expanded into a more higher in the tech solution space, where we are becoming an emerging leader in the whole remote monitoring technology for the BFSI clients as they look to monitor their sites at ATMs and branches and gold loans, both from a safety perspective, hygiene perspective, security perspective, basis both compliance norms and security norms. You need technology and you need software to do this in a much more intelligent manner than companies have done before. And seizing that opportunity, we've entered the space last year with a very small acquisition. And now we have quickly ramped this up to cover 15,000 sites, which will run technology built by CMS on an IoT platform, and cloud software. This order book is significant. This was a zero revenue in FY21, but we already have got an order book of potentially 380 crores in this business, which again points you to how strongly this business can grow rapidly and taking our overall platform growth into strong digits. Switching to give you a sense of what does all this in numbers, right? We were last year a 1,300 crore company in revenue with a 306 crore EBITDA margin and 169 crore of PAT. But I think it's important to tell you the history out here in the recent past. In FY19 to 20, we grew our revenue 21%. And then in 20 to 21, we had a dip of 6%. And I say a 6% dip for a company which is serving broader consumers in India and consumption in India in a year where COVID had a massive negative impact on every company is quite spectacular given the fact, and it's a testimony to the fact that we have a very resilient, diversified business model, doing multiple services, all growing at their different respective paces. Then on top of that, I think we are able to drive a lot of technology implementation and automation in our own core operations, which have helped us deliver better margins year on year. Our EBITDA margins have grown from 18.7% to 23.4% over 2 years, which is almost a 470 bips expansion. And finally, I look at PAT, and our PAT margins have gone from 8.3 to 12.7% end of FY21. We are a zero debt company for the last 2.5 years. We have had 307 crores plus of cash at the end of FY21. How is FY22 faring, which will be of interest to all of you and to your investors. FY22 first 5 months, which are the numbers we reported on RHP, the revenue for the company is 626 crores. If you take the 26 crores, you divide it by 5 to get a monthly run rate, multiplied by 12, this will be roughly a 1,505 crore revenue. Now, assuming there's a straight line extrapolation, which is not necessary, it could be higher, it could be lower. But if you just have to take a simple arithmetic, the 626 resulting in a 1,505 crore revenue would mean a 15% revenue growth over last year, if we can maintain this run rate, if not improve. I also want to underline that these 5 months had almost 4 months where we had significant COVID wave 2 impact in the country, in many parts of the country. And I hope that doesn't repeat for the rest of the year and the rest of our lives. The same mathematics on the PAT side would result in a 20% potential PAT growth if the 84 crores of PAT in 5 months extends again in a straight line at the 13.4% margin we've seen. So we are talking about a year in which we continue our growth trajectory, our margin expansion, our profitability, and all the good things which we care about building in our company over a long-term sustained basis. I want to step back to explaining to you about what is the cash cycle opportunity in India. When I think of the cash cycle, RBI prints currency. That currency is managed and stored in a currency chest. And then the banks will dispatch the currency using services like ours to either a bank branch or to an ATM. Now that is when the banks start paying for the cost of currency. So banks would like to keep the currency at maximum time possible in the currency chest and just in time dispatch it out. When it comes to a bank branch, you can go withdraw the money, or it goes to an ATM site, you can go and withdraw your money. There's only 2 places usually you go to withdraw your currency from. But the ATM site has become a very interesting value chain. And I keep telling people there is cash which you see in the form of physical note, but there is a lot of technology behind cash which is behind the scenes, which is not obvious to a consumer. That technology is from you can see it at the ATM site, you can see the currency chest where you are processing the notes and checking for quality. At the ATM site, the ATM machine is up and running. It's a piece of hardware and software which has to be maintained and run round the clock, 24/7, in winter or summer, in humidity or not, at different times and climates, at different altitudes in the country. That has a massive value chain around making it run, making sure the ATM is available with currency all the time to a consumer. And therefore has a hardware element, maintenance element, it has a software element, it has a remote monitoring the site element. This value chain is becoming very large, and more banks, especially the public sector banks, are looking to outsource this lock, stock, barrel. As that happens over the next 4 to 5 years, this industry will grow in size very rapidly, and therefore provide opportunities to companies which have an offering for the sector. Money is withdrawn, is spent somewhere. It can be spent in a large shop, it can be spent at a small shop, it can be spent at any place in the country. Invariably, then banks need to find a way for this money to come back. And in many places, especially if there's large volume transactions at an organized retail store or an NBFC branch or an insurance branch or a hospitality chain or a restaurant or an e-commerce depot, where a lot of the currency, a lot of the orders on cash and delivery, you'll need a company like CMS to again evacuate, bring in the money, process it, account for it, and deposit it, so that the currency is available as soon as possible to the banking system to use again, so that you can use lesser notes to drive the working capital and cash velocity in the country. So this is a fairly interesting business for people like us. And we are focused around the whole opportunity around banks outsourcing more and the velocity of currency becoming higher in the country. So to summarize, our straightforward strategy playbook is there is a cash cycle in the country, which is a mix of logistics, risk management, and technology services that is growing rapidly in the country despite digital payments. There is a lot more outsourcing happening there. We have secured a pole position of strongest market share and a branch and fleet network, which is much ahead of anybody else, which gives us a very significant moat and competitive advantage, which people have not been able to replicate till now. We want to leverage that scale, that unit cost economics, high profit margins, to expand into sensible adjacencies. And as a sensible adjacency, it means an adjacency which has a potential to grow over the long term, adjacency which can be significant in size and volume, and most importantly, it's adjacency in which we think we can be a number one and the best quality player. Our fundamental belief is that if you can be the largest company in any sector or any vertical, you will get a disproportionate part of the profit pool of that industry. And therefore, to drive this growth and expansion, we seek both consolidation or growth from both organic, share shift, and growth, as well as through a very rigorous M&A practice which we follow. So I want to switch to the growth opportunity. In terms of growth, we have three areas of growth which I want to summarize for you right now. There are many sub-bullets, but let me focus on the three big ones. The first and foremost, and the most visible in the front and the short term, is the whole banking cycle. Because of the post-demonetization, and then we had the whole NPA crisis, they had GST, and now COVID, I think has been under strain, and banks cyclically have had a little bit of a downturn in the last 4 or 5 years. The public sector banks are also going through the merger process. And after the merger process, their balance sheets have been beefed up. They are now looking for growth. And more importantly, they're looking to outsource non-core activities to third-party companies who can deliver economies of scale, cost savings, efficiency, better customer service for them. So we are witnessing a very interesting phase where large contracts are being bid or are being tendered out by the public sector banks for bids. We have seen a very large volume of these contracts in the last 18 months, and we know the pipeline for this is significant for the next 18 to 24 months. And you can all go to any public sector bank website and go and look at the RFP list to witness it yourself. So there is a significant refresh cycle because banks didn't have the capital to do this in the initial years, in the prior years. And that expansion and refresh is a great opportunity for CMS and managed services to start bidding for, because this is an industry and these are contracts where we were not usually bidding 3, 4, 5 years earlier. And now we have started bidding. Not only have we started bidding, we also started winning a particular share of these contracts. The beauty of these contracts is that they lead to multi-year contracts. Whether they are capital light or capital intensive doesn't matter. They are usually 6, 7, 8 years long, which for us as a management team is great because it gives you a strong forecastability and predictability of revenue. The order book we have won, as we finish executing that will grow our managed services revenue significantly. And that revenue remains stable for the coming years. And our cash management business is a very strong annuity business where we have every year grown in both volume and pricing and value. And that also gives you a very strong tailwind or forecastability. So when you think of us as an investor, we are a company which usually keeps accruing more than what we have each year at different rates, depending on what the conditions of win and loss may be. But we have a systematic way, therefore, of expanding and growing and therefore compounding our business, our revenue, our profitability, which I think for our investors is very key to be able to forecast and predict that. The second is the whole opportunity around which comes into play with the focus of RBI on the ATM channel and the Indian consumer. RBI looks after the needs of an Indian banking consumer. They are driving a lot of focus on global standards to be followed by banks, cash management companies, and other players in the ecosystem, so that the quality of the ATM infrastructure is safe and secure for the consumer. The quality of cash outsourcing norms which are followed in the industry are at the highest quality, so there is no reputation risk or there is no money which goes missing. And finally, they're focused on financial inclusion. How does the last mile get access to a banking ecosystem, which is usually through a bank or through a bank branch or through an ATM point? So those norms, we feel, are also spurring banks to outsource more so that they can comply with these norms in an efficient and time-bound manner. And whenever there is a flight to compliance, the best quality company, the highest quality company, usually has a significant advantage in getting new business compared to other players who may not be fully compliant or may not be at that level of scale and compliance. And the third, so I think number one is immediate visible. Number two is something which we are seeing happen and will happen over the next couple of years as each bank adopts these standards. Number three is, I think, the long-term terminal opportunity out here of the Indian economy. As Indian economy formalizes, basis the thrust by the government on formalization through GST and all other initiatives, you will see India get bigger in both GDP, per capita GDP, consumption will increase, expenditure will increase, and forms of where you spend money will change, whether it's at a cinema theater, or it is on e-commerce site, or it is in a retail store, it will increase. And as people start shifting their buying behavior over the next decade to more organized places, companies like us get a great tailwind and secular growth opportunity where as India grows, we will be able to grow along with them over the next 10 to 20 years. So I'm going to switch a little bit more into the details of what I just told you about and give you some data points to back it up. The order book, which I talked about, the public sector banks, the opportunity is witnessed just in the last 15 months, the win rate of CMS. There have been RFPs from banks in the public sector, which are almost at 20,000 ATMs, some of them for upgrade and update, and some of them for expansion. And many other banks are following suit. And this is coming as integrated RFP where they are buying a variety of services together, which again brings great advantages to companies like us because we straddle everything from cash management to software to remote monitoring in-house. So when you look at some examples in this order book of 2,000 crores, we've got SBI brown label ATM project, which is roughly 1,000 to 1,200 crores. We have then got a SBI remote monitoring project we won separately for about 220 to 260 crores. And we have some other public sector bank, both brown label ATM and remote monitoring orders, which are going to be in the range of 400 to 450 crores. So we have given you some indication of the orders we won till FY21, and we aren't sharing the orders we have won after that, but that will tell you the run rate. And as these order book accumulates and we execute these orders, our revenue should grow very well. I prove this again in one more the form of what we are talking about. You look at State Bank of India, the country's the largest bank, serving almost 25% of India's economy. You look at the fact that from 2014 to 2021, you can see everything I've told you till now coming together. Our expansion strategy, our moving to adjacencies, are going from logistics to automation to software to remote monitoring. All of this is not a narrative, but is a proof point. And not only a proof point, it is a win. It's a large win at the biggest bank in the country, which tells you about the quality of our services, which tells you our reputation, and also the trust large banks have in our capabilities on execution and technology and service quality. I'll pick one project here in between because there are 7 of them or 8 of them. I'll take the 2018 project because this is unique globally, where SBI they ran an RFP, a global RFP, seeking companies which could run a multi-vendor solution, multi-vendor software solution for all their disparate ATM networks. And this needed managed services along with it. And this was globally some of the biggest companies which can do the software bid for it. And finally, CMS won this multi-100 crore order from them, which spans a time of 7 years. And SBI has placed an order with the rights to grow this to almost 100,000 ATMs whenever they set up 100,000 ATMs. Today, we are doing this on 46,000 ATMs. But this is unique, world-class global reference case study, which CMS has won in a bank like SBI. Whatever we've done for SBI is what we would aspire to do, let's say, for all the other banks in the country whenever the opportunity arises and whenever we are able to win them, both at public sector and private sector. And I think that's the opportunity stream. And that's also indicates to you many things, the quality of a company and why we win. We win because our pricing and our quality is and technical quality is of something which a bank is very happy with. And then we win and maintain those projects. Invariably, if you're able to service a project very well for the time duration, there is usually an extension which a bank can do to extend the contract for you for another year or another 2 years, depending on the circumstances at that time. So on top ribbon, you can see the variety of services we do for a large bank. We don't do all of these services for all the banks yet. We invariably do cash management for everybody. But over time, we aspire to do all of these services for as many banks as possible and as possible. I move to the regulatory impact on the industry. On the regulatory side, the RBI first has to care about the Indian banking consumer, and they're doing everything they can to make sure they get a good quality, dependable service. And for that, they also need to make sure there is financial inclusion, there is access to cash, availability of cash, should be at the highest level. And you can see that from various circulars and policies the RBI is trying to enforce in the banking system right now. They also increased the ATM interchange fee, which is the money a bank can make if a customer of another bank comes and transacts at their ATM. And this fee has gone from 15 to 17 rupees. It's a 13% increase, which is meant, in my mind, to spur deeper ATM penetration in the country so that the last mile in India can get an ATM access. It's also meant to incentivize private companies which are deploying ATMs on their capital to be able to go out and deploy ATMs to make it more remunerative and more profitable for them to run the service on behalf of the banks. The RBI is also mandating minimum net worth. They are putting in conditions of the type and quality of your fleet, your vault infrastructure, and whatnot. And the Ministry of Home Affairs also has some compliance norms to be met. And as us and our other industry players start to meet these, there will be a shift because many companies may not be able to afford the cost of compliance, or the quality or the scale from where they have to match up is very big. We have been always a very compliant player, and as soon as there are new compliance norms, we are the first ones to try and get to achieve those norms. So as these norms get implemented in a systematic fashion in the banking sector, we expect market consolidation to happen, because only high quality companies will be high quality with good quality of capital and a good balance sheet should be able to weather the storm. People who have got weaker balance sheets, especially post-COVID, should not be able to manage with this. But in return for investing the capital to comply, banks will have to pay a higher fee for the services. For example, in ATMs, the banks may need to end up paying almost close to 3,000 rupees per month per ATM more for getting the services to compensate for the cost increases which the companies like us will have to entail on behalf of the banks. And if they were to do a cassette swap process, for example, the technical term here, they'll have to pay another 1,000 rupees per month. So I think there is a lot of opportunity here. Of course, there are investments, but we are a company with a lot of scale, with a very strong balance sheet, a very low cost of capital. And therefore, we are in a very good place to be able to make those investments and also get a return on the investment using the combined network we have put in place, which is bigger than anybody else out there. When I come to the formalization opportunity, which is the third thing, I think I want to refer to 2-3 elements here. First, I'll talk about retail, because that's something all of you understand very well. India has got almost, I think the organized retail points in India, we think will be close to 3 million, which we are forecasting, which Frost & Sullivan, which is most of the data is on the presentations from Frost & Sullivan reports or from RBI and NPCI publicly available data. The 3 million organized retail outlets are expected to grow to 4 million retail outlets. But within that, if I had to think of logically addressable outlets, we think there are almost 4.5 lakh outlets which should be doing cash management today, which will grow at a 13% CAGR, which will grow at some 10% CAGR, let's say to 8 lakh. But the outsourced ones in dark blue, the 1,10,000, will grow to 2,20,000, which is double in the next 6 years, which is a 13, 14, 15% type of growth rate opportunity in volume. And I'm telling people that this is if you go to most developed countries, even large emerging countries, like you go to China, you go to Brazil, the biggest revenue for cash management companies comes from the retail sector. In India, it comes from ATM. Not because ATM is bigger, it's simply because the retail, in India, organized retail is still very small, and that's a multi-decadal opportunity for anybody participating in the retail story, whether you are brick and mortar retail or e-commerce retail. And as that happens, we think it's a 10 to 20 year opportunity for us of a 10, 12, 13% volume growth systematically for us to be able to do as more shops become bigger or the business moves to larger organized retail outlets. The volume of currency they will accept will go up, and we will be needed to manage that either through our logistics network or through our technology network. The other large part of the business I talk about out here is just simply the ATM business. In ATM business, I want to switch to the next slide and just show you on the left-hand graph. India is the world's third largest ATM market. It's not a very well-known fact. China is the largest, America is the second largest, and then it's India. India has more ATMs than all of Western Europe and all of Eastern Europe and all of South Asia combined. But when you move to the center graph, the average in India is 22 ATMs per 1 lakh people. That in China is 95. In Mexico, it is 103. and in USA is 123. So the global average is close to 50, and we are half the global average. I understand our population is high, but there are so many other countries high population like China, but the penetration is 95 per 100,000. Now you switch to the right-hand side graph. There are many Indias. There is the urban India, there's the metro India, there is semi-urban, there is rural. But I want to show you states. You look at a large state like Tamil Nadu, or you look at a large state like Andhra Pradesh, and the penetration of ATM is 35 or 29 ATMs per 1 lakh. But there is Rajasthan, Madhya Pradesh, Uttar Pradesh, Bihar, where respectively the penetration level are 7, 10, 13, 14. And that's increasing. And as those states do well and their GDP growth of state goes up and the consumption goes up, you'll see more financial penetration, and therefore you'll see more ATMs on there. So therefore the overall ATM number in India will go up. And when I go back to this slide, on the left-hand bottom graph, we are referring to a 2,55,000 ATMs in India, growing to 3,65,000 ATMs at an 8% CAGR as per FNS reports. But only 1,53,000 ATMs are outsourced. And that is expected to grow at a little higher pace as more outsourcing happens in the banks, and that will get to 2,75,000 ATMs in FY27, which really becomes our addressable base. The remaining 90,000 ATMs we still think will be done by the rural cooperative banks and some other smaller banks, or some banks in-house and their branches. So our opportunity becomes this 2,75,000 ATMs, in which today on the 1,53,000 we have a market share of 43-44%. As consolidation happens, the top 2 players in the ATM cash management space have grown their market share from 60% to 72% in the last 3 years. And that consolidation is something which has been witnessed across all countries, because these businesses render to scale, economies of scale and risk management. And then automatically these industries go towards a duopoly sort of situation. As that happens, our market share should go up. So when you look at a 2,75,000 ATMs, our opportunity to multiply revenue in ATM cash management grows up significantly from the current levels to those levels, because both pricing is increasing rapidly at 40 to 50% right now, and the volume should on a systematic basis grow by at least 10% for the market, not for us, over the next 6 years. And hopefully, if we do a good job, we should get a larger share than the market growth. You move to the right-hand side, which is a common question most of you will ask in the Q&A. And I want to preempt it here by saying that the big opportunity comes from when I talk about formalization. One is the retail sector formalization. The second is just the formalization of the Indian economy. Today, when you withdraw currency, you go spend it somewhere. Invariably, the money doesn't come back to the banking system. So the bank has to print more money. So RBI has to print more money and issue it out. So money keeps floating around in smaller pockets and communities. It doesn't come back, because it's very cumbersome to go find a bank branch, stand in line, and deposit the money. And many businesses are using currency, cash as their working capital. They turn the money almost every day, and you'll understand their business, right? The velocity for them is very high. And therefore, when you go to a ATM in India, the velocity of currency withdrawn from an ATM in India divided by the currency in circulation is very small compared to any developed or developing market. I've given 3, 4 examples. I've taken Russia, Brazil, China, Canada. And therefore, I think there is no choice, but we will see more currency being issued or withdrawn from a ATM in India, spurring their usage. I don't know what happens to the number of transactions. People may withdraw more money per transaction also, or there will be more transactions withdrawing more money. We don't know how that will pan out. But the way to think about it in a different manner is, there are close to 925 million Jan Dhan accounts in the country. Bank accounts. Most of them are Jan Dhan accounts. All of them have a debit card. A debit card has 2 uses primarily. You use it at an ATM to withdraw cash, or you use it at a point of sale machine, you swipe it for doing a digital transaction. So a debit card has both a physical version and a digital version. Out of the 900 million debit cards, only 250 million debit cards are used actively, which is more than once a month. The remaining 650 million aren't used and will get used over a period of time, over the next 5, 7, 10. So I tell people that is the opportunity for the ATM channel, that there are 650 million bank accounts, debit cards, which are still not active users. And as their income increases, as their comfort of using an ATM increases, as they can find an ATM to transact, the transactions per card and the number of debit card users using an ATM will go up. That is a massive number of 650 million untapped market there for it. You compare this to UPI, which is the digital form of what we were most common way of referring to digital today. There are 250 million UPI accounts, which are about 175 million must be used actively more than once a month. And that is growing at 18 to 20% a year, while if the debit card usage is growing at 8 to 10% a year. It is growing slower, but it's 8 to 10% on a much larger base. UPI on a smaller base is growing more rapidly. And I say as India grows, and many versions of India grow, not only just the big cities where everybody is comfortable using a digital form of commerce, but majority of India, I think you will see all boats will rise and all growth will happen, whether it's cash or it is cashless. And I think there's significant opportunity from just the formalization of the Indian economy, which needs efficient technology-led players like us to be able to serve the banks and grow along with them. So if I have to put this all together and what it means in terms of money, the opportunity is that in the cash management sector, that sector should grow from 3 times over the next 6 years, which is a 20% opportunity. I talked about a 10% volume opportunity. I talked about a 40 to 50% pricing opportunity. You combine the two, you spread it over 6 years, it comes to, and these are estimates, third-party estimates, but you have a 3x opportunity for the cash management sector to grow. Again, banks will outsource more. You go to the managed services side, and we have covered everything from banking automation to brown label ATM, managed services, software solutions, and remote monitoring. That's a business sector going from 6,800 crores, almost close to $1 billion, to 17,000 crores in the next 6 years, growing at about 15-16% a year. You combine the two, we're talking about an 8,500 crore industry growing to 21,000 crores. That's a 17% growth opportunity for the market. Now, we may grow lesser, higher, we'll see. But when I tell people, if you're to forecast what we'll do, the simple arithmetic would be in the 8,500 crores, we're a 1,300 crore company, right? Or we are a 1,500 crore company potentially this year. This is the arithmetic I told you. You take the market share divided by the bottom size of market, extrapolate to the 21,000. That tells you the type of size we should grow to if we grow in line with the market. We may grow higher, we may grow lower. So coming to future, what else are we excited about? We have a very strong platform. We have a very strong growth opportunity in the country. We are very excited about the remote monitoring tech solutions, which we have incubated last year. And we're excited about it because banks are trying to automate all of their sites, bank branches, ATMs, gold loan branches, insurance branches. They all are trying to automate themselves with this remote monitoring solution. Remote monitoring technology also has come a long way because the technology is evolving rapidly. I think we have got a fairly robust remote monitoring system. We got proprietary software, which is able to do a lot more through machine learning, AI, and self-learning technology. That means that we don't need hundreds of people in the back office staring at screens. The software is able to predict issues. The software and AI is able to predict threats. Is also able to manage the environment of the site, managing the temperature, managing the energy levels, and managing any threats. And it's escalating that either to a central control center or to the local authorities or to some quick response stream close by so that one can come and check if there's some risk at their site. So this works very, very efficiently compared to what people have done before, which is physical guarding. The size of the sector is just a BFSI on the right-hand side is an 800 crore sector. Size today, expected to go to 3,000 crores. We entered the sector only last year, or actually towards beginning of this year, really. And we already have won orders to deploy this at 15,000 plus sites, right? And this is something which we are excited because not only do we have right now got the best technical solution, we are poised to become one of the largest companies in the sector in just a very short span of time. And more importantly, all the recent large contracts we have been able to win out there. As we grow this business, we are investing in new technology, actually also investing in new technology companies so that we can take the solution offering to other sectors outside BFSI. There are many use cases in restaurants and quick service restaurant chains. You look at, I talked about gold loan branches. You look at solar parks. You look at telecom towers. You look at warehousing and logistics. There are many, many use cases out there. We are quickly investing and evolving this technology to be the first one and the best one to be able to offer it. And then to support this for our customers, we got a large engineering team already present and supporting our managed services network on the ground, which can help customers if and when a need arises. I think I have the one last slide, which is really about, if you have to think and imagine the future and you think of FY25 to FY30, what are the businesses we are investing money to try and pilot it, right? I want to be careful saying we're piloting these businesses. We have studied them for long. We have looked at people in these sectors, and we think there are opportunities potentially in all of these areas, whether it's on-demand pickup, which is really Uberization of cash. How do you have a consumer cash app to do cash pickups, cash deposits? How do you create a merchant payment or a bill payment ecosystem at the last mile at the Kirana store at scale? How do you run a profitable micro ATM network so that the last mile where you don't have ATM access, people are able to get access to money? But there are, again, as I said, there are companies doing this piecemeal. Some of them do a couple of these services. We still haven't come across a business model which has scaled or can scale to be the number one. We will aspire to try and create a company which can be the biggest in this and hopefully very profitable. But as of now, we are in pilot stage. Our efforts have been hampered a little bit because of COVID and the whole NBFCs and moratoriums and whatnot. Coming in the coming years, we'll again double down and invest our efforts to try and build and scale these businesses, see which one of them could be a good fit onto our currently very large network of services. Thank you so much for your time and patience. We will be happy to take questions.
Thank you, sir, for that insightful presentation. We'll now open the floor for the Q&A session. We've already received a number of questions, so while we take those up first, I'd like to remind everyone to post their queries in the Q&A panel. We'll try our best to ensure that all queries are addressed. However, due to the limited amount of time that we have, we may not take any repeat or follow-up questions. The first question. Could you please tell us why you chose to enter the remote monitoring space? And could you tell us something about its prospects?
Sure. I mean, that was one of my almost last slides. Entering any new sector, again, I want to quickly explain the philosophy of our team. We will enter into a new sector either because we think there is significant opportunity for growth, number one. Number two, for us to become the clear market leader through either a network or technology or whatever it may be. Number three, the current set of players in this sector isn't able to scale or service the customer requirements to the level of quality required. If we think these things come together, then we absolutely are interested in space. And remote monitoring is one of the sectors where a lot of banks were asking us and urging us to look at the space because they weren't finding either the quality or the scale in the current incumbents. And we thought this is a very good sector. It's closely linked as an adjacency to our current business. And we were able to build a very robust proprietary software platform in which we think we have got a great moat with which we can continue to win orders at the pace we have demonstrated till now.
Thank you.
And the size of the sector, we said within BFSI is an 800 crore market expected to grow to 3,000 crores. But in the broader industry in the remote monitoring space is a potentially a 10,000 crore opportunity there for us.
Thank you, sir. Next question. Apart from SBI, which are the other PSBs that you are serving? And which are the other private sector banks that you are serving?
So, based on our filings and all, we can't disclose the specific names, but all I would like to say is that we work with almost every bank in our cash management business, in a managed services business, which we have entered in the last 3-4 years. We have got wins in several large public sector banks. The ones we can disclose are the names of SBI, where we have permission to disclose, which we have. But needless to say, we are the contracts wins, the size of the wins means that we are able to penetrate and win in many other public sector banks. In the private sector banks, we work with all the leading banks, including ICICI, Axis Bank, HDFC Bank.
Thank you, sir. Next question. What sort of volumes do you see in the bullion business, and how exactly does your bullion business work?
So our bullion business right now, it's a business which we're incubating. Again, we just started incubating this pre-COVID, and COVID has been a little bit of slowdown overall. But for bullion, we have multiple angles of where we are looking for the opportunity, right? Either as a partner for digital bullion businesses or for the banks or for large gold loan companies which need the last mile connectivity or they need the security systems where they want to use our storage requirements. So there are multiple opportunities there. We are still building this business and evolving our go-to-market. I think it'll be a little premature for us because I think FY23 is where we will hopefully launch this in a much broader manner. It's a very small percentage of our revenue right now.
Thank you, sir. The next question is something that has come from a number of people, so I'm just going to club it into one. How will digital payments, UPI, and the digitalization of the cash economy affect your business? And since it does not involve direct movement of cash.
So, digital payments growing, a lot of digital cannibalizes digital itself. Wallets got cannibalized by UPI, NEFT is getting. So I don't know how exactly we count who cannibalizes whom, but it doesn't matter. Till the overall economy and the pie is increasing, your share of the pie is good, you're fine. What I want to point to people is, disruptions will come and go. There are different types of disruptions, man-made, natural, whatever. As a company and a management team, we have witnessed many disruptions, short-term or long-term. There can be a flood in a state. There can be an epidemic like right now. There can be something like demonetization or GST. Despite that, I think our company has steadily grown our P&L every year. And I think that's an important testimony to the quality of the team. Secondly, it also tells you that our business strategy, which is what all do we do it, how do we do it, how do we price for our services, and what are the business model behind it, and how do we run our operations at an efficient cost to deliver good profitability, sort of should give people comfort on the fact that whatever we can even forecast today, the team is working hard to make sure that we build a business and an institution like in the last 12 years, which can last the next 10 and the next 20 years, and do more and more type of services. Today, we don't have one clear dominating line of business. We are not a one trick pony or a one business company. We've got 7 different services in the company, and all of them have their different opportunities and challenges or competitors or needs of the customer. And our opportunity is to keep launching more services which can keep scaling up. Remote monitoring was not anything we did till about 2 years ago. It was zero part of the revenue. As you can gauge, this will be a very good part of our revenue in the next 2 or 3 years. And that will give you a diversification because the remote monitoring piece is a very untapped market. And if something else, God forbid, slowed down, we are incubating very high growth businesses to take care of any such negative impact potentially. Within the cash management business, I want to explain this to people because people think of digital and cash. I think both are growing. Cash does different things and digital does different things. But cash in circulation is 30 lakh crores. It's grown 12% a year. I would be very happy if my business can grow 12% volume growth every year. So I think while we see currency in transit growing at that level, where the cash in circulation at that level, but I look at our retail growth is linked to organized retail. Organized retail will both be cash and digital. And the volume of cash may go up and down, but we'll still be serving the need. A shop will need us, a retail store will need us to come every day to manage the money so that the money can be back into the treasury, producing a return rather than lying in a till. Our cost of service needs to be effective and efficient enough for people to use our services every day. And that's what keeps us going to run a very robust, optimal network.
Thank you, sir. Next question. Could you tell us how large your order book is and what is its composition?
I think we had a slide on the order book, and we can maybe try and pull up the slide again. And people can have a look at it instead of me speaking nonstop. Just 1 second. Yeah, no. So this is our order book at the end of FY21, at March 21, which is roughly a 2,000 crore. This has a base order value and a bonus potential order value, which banks keep as a reserve when they want to expand. And as you can see that this is an order book only for our managed services business, which is our brown label ATM, remote monitoring, and managed services businesses. It doesn't have anything to do with our core cash management business because there is no order book. There we're working with everybody already. And what only happens is that people expand and give you more work. We were doing 63,000 ATMs, for example, at the end of March. At the end of August, we are doing 66,000 ATMs. Similarly, in retail cash management, we're doing X number of points at the end of March. We are now doing, I think, 41,000 points, which we shared at the end of August. So in retail cash management and ATM cash management and currency in transit, our business steadily keeps growing. Either there is market expansion or there is share shift from a smaller player to a big high quality player like us.
Thank you, sir. Next question. You mentioned about minimum net worth and fleet size and certain minimum standards as per RBI compliance. Could you please elaborate more on this and how do you see the entry barriers in this business?
So I think from again, I said, the RBI cares about the quality of the infrastructure people deploy because finally people are carrying and managing currency on behalf of the RBI. So reputation management, risk management, consumer access, consumer protection is very important to the regulator. Their intention from I think the minimum net worth, which RBI has qualified for companies to operate in the sector, is 100 crore net worth. Secondly, they said you have to have your own on leased network of fleet of at least 300 vehicles. They want to make sure there are not very small companies on which there could be risk for the banking system. And there are many other conditions, basically the quality of your fleet, the quality of Ministry of Home Affairs also from a security standards perspective has got some requirements out there. It's too cumbersome to go into right now in this Q&A, but suffice to say that basically your vault quality, the technology you use, the quality of your fleet, what is your investment in the sector, how much is your net worth, are you fit to handle this work on behalf of the banks or RBI? I think there are many things which the RBI is trying to enforce there for all of the sector to make sure that only serious players are participating in a sector and there are no players who may be, may not be compliant and may create any systemic risk later.
Yes, Rajiv, it is summarized in page number 172 and 173 of the RFP.
172 and 173 page, okay, of the RHP. Okay, thank you.
Thank you, sirs. Next question. How do you see your profitability margins improving even further from here on?
You're not happy with the profit margins? I think, profit margins and improving profit margins is linked to many things. The way we think and we hope is that we focus on good quality contracts leading to revenue growth. The benefit we have is a lot of our business is very stable and we keep expanding and adding on to it. We don't lose any large customer. And as the volume of business we can do with clients increases, volume increases in two things. In that particular service, they give you more things or they give you new services, which is both is happening to us. And I think as revenue grows, I think the fundamental thing about profit is that your business has to grow. And we have even proved that even when business did not grow in the year of COVID, the management team had done enough work in the prior years, which helped us automate a lot of our operating systems to make sure that we could deliver a strong margin expansion in that year. The logical question is, can your margins expand, which we have proven again, when you look at the five-month data, that our 23.4% EBITDA margin has expanded to 14.1%, the EBITDA margin, sorry, 24.1% EBITDA margin. So in the last 5 months. So I think as a company, we aspire to build up profitability. Profitability is both in a physical number and also the percentage. And I think it all depends on our execution and our team's ability to do more and more with the same set of clients.
Thank you, sir. Next question. Could you please tell us if you already have any acquisitions lined up?
You do know we can't talk about acquisitions at all or what is lined up. But I would only, without any guidance, all I would say is that we've done 7 acquisitions in the last 7 to 8 years. We have done both tuck-in, bolt-on, transformational. We have done consolidation. We've done technology, acquiring technology. We've also done acquisitions to invest and enter into a new sector. So it's a team which we run a full-fledged M&A engine. We are, thanks to our private equity ownership, you want to display this slide? Thanks to our private equity ownership, we have fine-tuned our M&A engine very well over the years so that we are fairly strong in capital allocation. And also when we look to get our payback period in acquisitions, I think we are fairly good at doing that. Now, when it comes to acquisition, I think going to the future, I think again, we are working on and looking at, here's an example of what we have done in the past, right? As the sector consolidates, and all of our sectors will consolidate, I think there'll be an opportunity for us to acquire a company. We'll obviously acquire it only if it gives us significant scale benefits and it gives us margin growth expansion, which we can retain over years. The number 2 part is that we continue to hunt for acquisitions or investments, as I would call it, to explore access to new technologies which can help us run our current businesses far better, or enter into new sectors. The new sectors I've already pointed out to you. If we are able to look for an acquisition, we find a good high quality company in any of those sectors which we think would benefit with the scale of CMS, we would look to acquire that in the coming years.
Thank you, sir. Next question. You have a fair amount of cash on your balance sheet. What are your plans for utilizing this excess cash in the future? And what will be your dividend policy?
Sure. Let me invite my colleague Pankaj to maybe opine on that.
So on 31st March, we have 300 crore rupees of the cash available on our books. As regard the dividend policy, in last 3.5 years, we have given the dividend ranging from 15% to 25%. This year, last 5 months also, we have given a dividend of 22.6 crore rupees, equivalent to 15.3%. We have seen that we have an order book of around 2,000 crore rupees, which we are executing, and in future, whatever the M&A other opportunity will come, we will be able to use those funds for the growth of the company.
Thank you, sir. Next question. For the orders that we have won in the last 18 months, how much capital expenditure would have already been incurred for these orders?
So I can't give you the exact number specifically for that. If you will see my financials in FY21, we have done a capex of 116 crore, and in FY22 we have done a capex of 52 crore so far in 5 months.
Thank you, sir. Next question. Could you please explain the unit economics of brown label ATMs? And what is the initial investment requirement and payback period and typical tenure of the order book?
I can't give you the exact unit economics because it's competitive data and is not given in the RFP. But if you will see the page number 142 of the RFP, wherein the F&S has given RFP. Sorry, my mistake. Too many RFPs, so I started using RFP. So F&S has given the per unit economics of the BL ATM of 40,000 rupees. And if you will refer to any of the banks tender, wherein the RFPs are given, it is around 7 years contract. So most of the BLA contracts are for 7 years.
Thank you, sir. Next question. The growth trend in your managed services business has been very fast over the last few years. Do you see this trend continuing?
We hope to see this growing because, as I talked about, the sector is very large. We are a relatively new entrant. Our size is still very small. Our revenue on this business was only about 364 crores last year, with an order book which is almost 1,500 crores on top of that. The sector and this business for us should grow very well. But more importantly, I think we see a very large public sector bank contract refresh cycle. Like in IT industry, you see large contracts coming in bulk at some points in the decade. We see that opportunity right now and for the next couple of years. Our job is to execute and go win those contracts and add to the order book, and then execute it to drive significant growth opportunity for our managed services business.
Thank you, sir. We're coming to the last couple of questions now. The next question is something that multiple people have asked, so I'm going to club it into one. Could you please talk about the competitive landscape and who are your like-to-like peers or competitors per se?
So, because we are in various segments in the overall cycle, there are many different companies we have to compare ourselves to. Very few companies I know of in India or abroad or internationally will have the range of services we have. In the ATM cash management, we are a #1 player with a 41% market share end of March. The #2 player would be AGS Secure Value. In the retail cash sector, there would be Radiant. In cash and transit, there will be somebody else. But if you look at cash management, right? Cash management, you will find an SIS Prosegur, which is a part of a listed company called SIS. There is AGS Secure Value, there is Radiant, and I think the writers. That's all I think the industry out there. When you look at the product automation side, we are in the top three. The other being NCR and Hitachi, which are global companies. When you look at the whole brown label ATM business, those are again very good quality companies there, like Hitachi, FSS, CMS. When you finally look at a multi-vendor software, we are the number one in India, and number two would be an NCR. And finally, when you think of remote monitoring, we are a fast emerging leader, but the incumbents there are companies like ProVigil and Securance. So in different streams, we've got different competitors. I think the beauty and the opportunity for us is that we are one of the few unique companies you will find anywhere in the world, which has put together a stack of solutions from logistics to risk management to software and remote monitoring all in-house, and are able to offer it at high scale, which means we get very good unit economics at that scale to be able to offer clients a strong value proposition of pricing, quality, and trust.
Thank you, sir. And the last question for today. What is the split of business between PSU banks and private banks, if you could share that?
No, I think, I don't know if we have exact split of PSU versus private banks, because again, there are many different services. But I would think that we look at directly from PSU banks, we do a lot of work for, let's say, SBI. SBI, we have many contracts with SBI. We'll have 6, 7, 8 different contracts with SBI, different deals we have won at different points of time. The sum total of that revenue must be 18 to 20% of annual revenue, right? Then we work with a lot of managed service providers who are working for the bank, for the ATM side. So I think it's very difficult to club this and tell you exactly a private and public sector. But again, I tell people that we are the largest cash management company. So you look at the number of ATMs, there are 255,000 ATMs, out of which 155,000 ATMs are outsourced. There is some split to public-private, more maybe, I don't know, maybe 45, 55, 40, 60. We are the largest, will be similar to that level. It won't be very different.
Thank you, sir. That brings us to the end of the Q&A session. I'll now invite Mr. Mohit Pandey from Jefferies for the vote of thanks.
Sure, thank you. Hi, everyone. On behalf of all the PRLMs, I would sincerely like to thank all the participants for joining this conference, and also thank the management team to walk us through their successful journey so far. To recap, CMS is a leading B2B outsourcing company that offers an integrated cash management and managed services platform. It is a distinct business opportunity with a strong track record of revenue and profit growth. The company has long-standing customer relationships, and the cash management business has an extensive pan-India distribution network all across India. Next, I'd like to summarize the issue details once again. The issue will open on the 21st of December, that's a Tuesday, and it'll close on 23rd of December, which is a Thursday, with the anchor book on 20th of December, that's Monday. The price band is rupees 205 to 216, 205 to 216. Public offer represents approximately 34.4% of the total shares. Company has garnered strong interest from investors, and the company will get listed on the 31st of December. Thank you again, everyone, for making this event, and we look forward to your support on the IPO.
Thank you, sir. And thank you, everyone, for joining the virtual brokers and analysts meet of CMS Infosystems for their forthcoming IPO. Please feel free to reach out to us for any further queries or email us at ipo@adfactorspr.com. We'll do our best to reply to your queries at the earliest. So do take care and stay safe. Thank you.
Thank you.
Thank you.